Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model daily briefing for Tuesday the 2nd of November 2021. Time is just coming up to 10 past 4 in the morning GMT. Asian session coming to close, European session firing up, our lunchtime North American session. Right, yesterday Monday the 1st then, first day of the month, we had a positive unopposed driver in the euro at plus 136. No backdoor flows, the opposing negative flows mainly coming out the pound at minus 99, out the dollar at minus 33, and the yen was the negative rock at minus 4, activity plus or minus 136. Intra-week then, we've got the same basic batting order, but we've got a positive secondary driver in the euro plus 118, but the actual driver here was the negative pound at minus 142. So we've got a negative pound, which was opposed, minus 142, driving positive flows into the euro at plus 118, into the yen at plus 38, and the dollar is the negative rock at minus 14, activity plus or minus 156. Right then, so just to sort that out, yesterday we had this unopposed strength in the euro. The bulk of it was coming out the pound. And over the week then, and this therefore this weekly here, this intra-week obviously includes the Asian session, and you're starting to see the pound is the unopposed, the opposed negative driver. So you can see that the pound is weakening further. The euro is still strong, but it's come off its position as unopposed driver, so effectively the euro is weakening slightly, and take your pick after that. So intraday then, this is the Asian session to about 15 minutes ago. We've got a negative opposed driver in the pound at minus 42. Front and back door flows mainly going into the yen at plus 39, into the dollar at plus 20, and the euro is a negative rock at minus 17, activity plus or minus 59. Now when you get this sort of situation, you get the pound and the euro on the negative side and the dollar and the yen on the positive side, tends to be sort of risk off, and when you get the pound negatively driving just over the yen, so it's not full risk off, but it's thinking about it. Right, we'll stop it there and write up the flows. Right, we've written up the flows then. So the euro is strong except against the dollar and the yen. The yen is strong across the board. The pound is weak except against the CAD, the AUD and the NZD, which are the commodity currencies. The Swiss is weak except against the pound, the AUD and the NZD. The CAD is weak except against the AUD and the NZD, and the AUD itself is weak across the board. The NZD is weak except against the AUD, and the dollar is strong except against the yen. So what have we got then? We've got yen strength in the Asian session across the board. We've got AUD weakness across the board off the back of this minutes from the Reserve Bank of Australia. Talk about that in a minute. Anyway, and we've got New Zealand weakness. We've got weakness in the commodity currencies. We've got dollar strength and yen strength. So that's where we are. So what's knocked it about, or going to knock it about? Well, we've had this. Well, yesterday, let's just have a quick look at this. Monday, then we had weak German retail sales. And we had neutral US PMIs, and then we've had this early morning. We've had this Reserve Bank of Australia rates decision, which they've kept the same, but they've basically given up the idea of controlling the yield curve, and they've got rid of their target for the yield curve, which basically has sent the AUD going down, but we think this is going to be temporary. Anyway, we'll talk about that in a minute. Later on, we've got the New Zealand employment change, and in between, so basically today now you've got a few tier 2 issues in the data, but it's basically light. so today's light, except for this boxing in at either end, which we've had the AUD rates decision, and tomorrow we've got the big one really. We've got the Fed rates decision in minutes. We've got ADP report, and we've got the ECB President Lagarde speech, which may or may not be relevant. But anyway, we've got it. So you've got this lull then before, you've got this window before this big data, which will be interesting. And as I say, we'll stop it there, write up the asset classes, and then do the final analysis. Right, we've written up the asset classes then. So US dollar index previously had a big pump up, came right back down, is now come back to 0.25 from the high, so it's 25% off the modelled high. Gold is just below half marks, 0.47 from the floor, so it's 47% above the floor. Oil did this big break, it's about 40% break on the resistance, and it's just come back slightly, it's 0.09, so it's 9% off the highs, but it's pretty strong. Wall Street, S&P Tech, they've all got the same look. They did this big break, and then they came back a bit, and now they're just hovering. They're roughly about 5%, if that, off their highs, and they've all got the same look. So they're all in lockstep. So we've got no differential divergence between indexes, which is interesting, and that's important when you're trading. Right. So and what else have we got? US 10-year and the bund. So this is the price. We had this big pump down in price, so rising yields, and then we've had this bounce. The US 10-year is 0.22 from the floor, 22% above the model floor, and the bund is 0.20, 20%. So they're basically in a similar position, and yields have slightly come off in roughly a fifth in model terms, both in the US and the EUR. So copper been chopping about, did a big break. It's now 0.42 from the floor, so it's gone back to weakness, which is interesting. And US steel has been dirging around the floor, and now it's at not half marks. So it's thinking about it. It's in the mid. So we'll rub this out and do the final analysis. The key thing today then to remember is that basically the data noise is pretty much finished until tomorrow. So the market is basically going to be positioning for the Fed and the ADP, which is a precursor, well, not very good indicator of NFP. So and if you look at well, let's get the usual framework up. So we've got dollar, euro, yen, pound. That's the majors really, and then you've got CAD, AUD, NZD, and the Swiss. Right. So we've just had this rates decision. We know about that now, and that pushed the AUD down off the back of this failure to control the yield curve. Right, we've got the FOMC on Wednesday, which is tomorrow, plus the ADP in the dollar, and we've got Lagarde's speech, which probably is non-event anyway, and we've got the yen being linked with equities, and we've got the CAD oil link there. Right, so if we grab this, let's see what we can say. So we had euro strength yesterday in the flows, to the exclusion of all else really. Over the week then, the euro isn't the strongest, isn't driving, but the pound weakness is driving. So pound was previously pumped, so we've got the pound doing that sort of hockey stick, inverted hockey stick on the way down. And in the Asian session, we've got the pound negatively driving as the opposed negative driver. You've got dollar and yen strength, which is risk off. You've got commodity currencies weakness, risk off, and you've got and the euro is starting to come off. So the euro, you've got this sort of pounds euro on the neg, and you've got dollar yen on the positive, and the action is that's driving and that's a secondary driver. So you've got a negative driver there, and the euro and the dollar are sort of caught in the middle there. So what do we think is going to happen today then? As I say, we've got this light data window before we've got this positioning in the Fed. We know that the dollar has sort of where is it? The dollar index has got this sort of look to it, and it's back 0.25 from the high. Right, and that's where we are there. It's likely you're going to get a continuation in dollar strength. So where can we do this without? So we would suggest that the dollar's going to be on the plus side. The equities are likely to go sideways until we see neutral to sideways. So we think the yen is going to be pretty much neutral to positive, and the dollar's positive. And then if you've got positive flows into the dollar and the yen, that's not a good environment for commodity currencies. And then you've got the opposing flows in the majors that are going to come out of the pound and out of the euro, which is what we're seeing in the Asian session. But we think the big loser is going to be the pound, because that's been so pumped, and there's not really any great reason to stop it at the moment. So basically, look out for short pound trades in this window, so short. Where are we? Pound yen is always is a likely short, and pound dollar. So we'd say they're the places to be interested in this window as the market positions for the Fed rates decision and the ADP. So short pound yen, short pound dollar, and watch the AUD. It's either going to bounce or dirge further down, depending on how the market feels. And the likelihood is, given the sort of risk off sort of thing, there's not going to be much appetite to buy the AUD. So that's where probably the action is there. Selling the pound against the yen and the dollar. Hope that was useful. Thanks for watching. See you tomorrow. Goodbye.